You're a limited company director and you're looking for a mortgage. What you really want to know is how the lender will assess your income. So when you're a director of a company, you have two main options. First option is to look at using your salary and your dividends. These will show on your personal tax returns, and this is the way that most lenders will use your income. On the other side, you've got your salary and the net profit of the business, and a select few lenders will use this option for you. So in this video, I'm going to look at both options for you, and I'm going to show you how to maximise your borrowing potential. Welcome to Mortgage Monday. Salary and net profit or salary and dividends? Which one is best for you? So if you're a director of a limited company and you have more than 25% share in the business, you can use either of these options, salary and dividends or salary and net profit. So what lenders will tend to do is, either way you do it, you're going to look at a 2-year track record of your earnings. So if you're going to go down the salary and dividends route, you'll need your latest 2 years personal tax returns. If you're going down the salary and net profit route, then you'll need your latest 2 years company accounts. All lenders work the same way, and if your profits are going up from year to year, they will take an average of the 2 years. If the profits are going down year on year, they will use the latest lowest year's figure. So I'm going to show you an example now of how you can utilise these different ways of using your income. So I'm going to use the same scenario. I'm going to look at a property value of £400,000, lending of £300,000 over a term of 25 years, and we're going to assume that there's a car finance in place which is £350 a month and an overall credit card balance of £5,000. So I'm going to show you firstly on the salary and dividend route, and secondly I'll show salary and net profit and just show the difference in the potential borrowing capacity for you. In this first example, I'm going to show you the salary and dividend route. So what I'm assuming here is that the average over the last 2 years is £40,000 of salary and dividends. On top of that, as we mentioned earlier, we've got a £350 monthly commitment on a car finance and a £5,000 credit card balance at the moment. Based on this scenario, the potential lending is £145,365. So borrowing capacity can be quite low based on those figures, and if we're looking at a potential borrowing of £300,000, we're nowhere near. Let's look at salary and net profit. So in this second example, I'm going to show you the salary and net profit. So in this example, I'm going to assume a low salary which most directors take as £8,500 as an average over the last 2 years, and I'm going to assume a net profit of the company after corporation tax of £70,000. Again, we have the same outgoings as £350 monthly loan payments on a car and a £5,000 credit card. Based on this scenario, the potential lending then jumps up right up to £372,850. So it just shows you, if you are a limited company director, then there are many options open to you, and it's understanding which way is going to work best for you. One thing I always say to my clients is, when you are talking to your accountant, make sure they are fully aware of what your plans are. So if you are planning a mortgage in the near future, tell your accountant and they can explain you don't potentially need to up your dividends end to have more personal borrowings, because there is an option to use the net profit of the business instead. Now, using the net profit of the business is quite a new route to go down. Not many people are aware of it, and even if you use the net profit of the business, there are still high street lenders that will do it this route, so you still get access to the best rates on the market. And if you've got a broker in place, they should be going through all the options with you, understanding your situation, to explore all the angles to make sure that you're getting the best deal and also maximising your borrowing potential as well. So if you're thinking of a mortgage in the near future and you need any guidance, any help with anything, here at Edison Wells Financial, we do take the time to sit down, understand your full circumstances, to make sure that you're doing the right thing for your circumstances. Any questions, any queries, as always, comment below. I'll always reply to everybody. Again, you can follow me on LinkedIn, you can subscribe to the YouTube channel. Thanks for joining me, and I'll see you next week for Mortgage Monday.